I think we're going to continue to see a lot of dividend increases across the market. Tend not to think so much in terms of, say, the next 3 or 6 months, but really the next 5 to 10 years. I'm not very good at predicting the short-term future, but if you're looking over the long run, I think it's actually easier to make good assessments of what is going to happen. And one of the things that we know is going to happen, what Jeremy Siegel's called the future that cannot be changed, is that demographics are going to change the way people are thinking about their investments and specifically about their equities, I think. As baby boomers are retiring, they're going to want more income. They're going to need that income in order to help fund portfolio withdrawals. And they're also going to shift, I think, toward more risk aversion. They're not going to want to ride the same roller coaster and attempt to just live off the pile. They're going to need those flows of income to help fund their withdrawals. So as we see that taking place, you're going to see, I think, companies respond by paying larger dividends, growing them at a good rate that exceeds inflation. They're going to need to do it in order to maintain competitiveness in the market for investor dollars. Well, a lot of people are really worried about interest rates, and I'm one of the people that is perhaps not. I think you look at most dividend-paying sectors of the market, even those higher yielders, even a group like utilities, very sensitive to changes in interest rates. I think that valuations right now already discount a 10-year Treasury moving from 2%, give or take, up to 3.5%, 4%, maybe as much as 4.5%. They never, these stocks didn't reprice fully to reflect the idea that 2% was going to be a 10-year Treasury rate forever, so they don't have that much to give up on the upside. What does worry me is inflation, and we've had an environment here for a number of years where inflation's been pretty low, only about a 2.5% inflation rate, even if we go back over the last 20 years. The problem that you run into with any sort of high income strategy is that if your income is not going to grow faster in response to a more inflationary environment, then you're losing ground. So I like to find individual companies that raise their dividends consistently, that aren't terribly vulnerable to having to cut their dividends if we have a recession or some other kind of financial crisis. But it's critical to get that dividend growth, and I want to find that at least most of my portfolio is invested in companies that should be able to grow their earnings faster and raise their dividends faster if we see inflation move up into 3, 4, 5% a year in the future.